Jeffrey uses a lot size that is way too big for his account. Even though he know that if he lose the trade, he will blow that account. But he ended up using it anyways because he believed that if he win, he could make $1,000. After all, there is no way he cannot win this trade, right? Like, look at this trade, confirm win one. Jeffrey is like most losing traders who do not practice proper risk management, and as a result, he continue to lose money and blow accounts after accounts. Adonis is the ultimate man. He is so disciplined that he always follow his trading plan. He uses a position size calculator and uses the right lot size for his account. He will only take that trade if it offers a risk to reward ratio of 1:3, and as a result, Adonis make millions from trading every single month. I was Jeffrey. I used to commit the exact same mistakes that Jeffrey does. And then I'll wonder, why am I not profitable yet? I know that right now you are still committing these exact same mistakes. So I'm gonna show you the right way that you should be trading. And trust me, this information that I'm about to share with you will change the way that you trade forever. In a good way, of course. I want you to remember that it does not matter how many times you lose in Forex, as long as your winners are relatively big and your risk to reward ratio is intact. I can literally lose 70% of my trades and still make money consistently just because I practice proper risk management. That is why risk management is so important. The most important point that I want to share with you today is your risk to reward ratio. The risk to reward ratio is basically like your distance from your stop loss to your take profit. So example is if you have a risk to reward ratio of 1:1 and you are risking $100 on each trade, that means that you are risking $100 to make $100. So if your risk to reward ratio is 1:2, that means that you are risking $100 to make $200. Twice the amount that you are risking. The reason why most traders fail is because their risk to reward ratio is either 1:1 or 1:2, and that is not what I do. Alright, a lot of YouTubers on the internet are telling you to it's okay to use a risk to reward ratio of 1:1, right? I make 80% win rate with a 1:1 risk to reward ratio. And guys, do not listen to these YouTubers, man. Do not listen to them if they tell you to risk 1:1. Chances are maybe they have a high win rate, right? But even the big boys, the best traders of the world, only have a win rate of 50%, which means they are literally losing half of the trades that they take. So if they are losing half of the trades that they take, you need to figure out how to make money when you are losing half of the time, right? Because if you use a 1:1 risk to reward ratio, guess what? You're gonna lose money or you're gonna break even. So if you want to make money, you need to use 1:3. So I always teach my students to aim for 1:3 risk to reward ratio. The more the better. 1:4, 1:5, the more the better, because you are literally getting in return quadruple or 5 times or 3 times the amount of money you are risking. And you always want to aim to get more in return because you are essentially risking this amount of money and you want to get back like this amount, right? So if you have a 1:3 risk to reward ratio, that means that if you lose $100. But if you win, guess what? You make 3 times of that, which is $300. And if you lose on a 1:4, that means you only still lose $100. But if you win, you make $400. If your risk to reward ratio is 1:5, guess what? You just made $500, even though you are only risking $100. What a good deal is that, man? Let's look at what Jeffrey will do. Jeffrey will use a risk to reward ratio of 1:1. And in this case, let's say that he is risking $500 on each trade. So if he wins that trade, guess what? He only make $500. And if he loses that trade, he loses $500. Same. Jeffrey loses 70% of his trades and only win 30%, which is very common, by the way. Like a 30% win rate is pretty common. More common than you think, right? So if he loses 7 trades at $500 each, that means that he lost a total amount of $3,500. So out of 10 trades, he lost 7, which means that he only win 3. So since he only win 3 trades and every trade he win, he gets $500. So how much money do you think he make? absolutely negative, alright, absolutely negative. He lost $2,000 just because his risk to reward ratio is 1:1. So if you can make this simple change to your risk to reward ratio, there is a higher chance that you can become consistently profitable. Let's look at another example. Adonis, on the other hand, uses a risk to reward ratio of 1:4. And when he lose, he only want to lose $300 because that is how much money he only wants to risk. He want to risk $300. And if he win, he's gonna make 4 times of $300, which is $1,200. So let's say that Adonis is just like an average man and he lose 60% of his trades. Even Adonis only wins 4 out of 10 trades. So Adonis lost 6 trades and every time he lose $300, which means that in total he lost $1,800. However, when Adonis wins, he wins big. So when he wins, he makes $1,200 on each trade and he won 4 times, which means that he made a total of $4,800 from his winning trades. So in total, for the entire week, he made $3,000, even though he lost 60% of the trades that he take. 60%. He lose 60% and he still makes $3,000. That is why your risk to reward ratio is so goddamn important. I literally can't even emphasize the importance of this thing enough. Right, it's just so important. So how you can apply this to your trading is that when you are analyzing a chart before you enter for the trade, TradingView allows you to have like this tool that can find out your risk to reward ratio. So you plot it right there and find out your risk to reward ratio. So personally, if it is less than 1:3, I do not take that trade. I will only take that trade if it gives me at least 1:3. So if you are trading and you see the risk to reward ratio is 1:1, do not take that trade, guys. Please do not take that trade. There is opportunity every single hour. Every single day there will be opportunity. So if there's no opportunity for you today, guess what? Trade the next day. Just make sure you do not take that trade. Always want to wait and be patient to let the trade come to you. And only take that trade when the risk to reward ratio is 1:3. 1:3, 1:3. Repeat it with me. 1:3, 1:3. So make sure that you really focus on risk to reward ratio first. Then go ahead and perfect your entries using tools like trend lines, support and resistance, Fibonacci, etc. And then you'll become profitable because you are not using basic 1:1 risk to reward ratio. So this is just the part 1 of this entire risk management class. There is definitely so much more things to cover in this risk management class. So make sure you comment down below if you want to see a part 2 and smash the like button if you want to see a part 2. If you find this video helpful, make sure you go down right now and click on that subscribe button and click on the notification bell beside it so that you can get notified when I drop a new video every single week. Welcome to the tribe and remember, you're just one trade away. Mwah.